Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 21st of March. And it's the start of spring. It's FTSE looking rather spring-like as well. We're nearly up to the 78.60 price channel top there from back in August. Looking for that, I was hoping for that by the end of next month, but obviously the FTSE sort of livened itself up now. Through 78.50, you've got the chance of a meeting with that May resistance line projection from last year as high as 80.20. By the end of April, but obviously calling the FTSE up to that area would be breaking or snapping a 24-year odyssey in terms of this market getting up towards 8,000 and staying above it. So maybe one has a bit of a pinch of salt there. End of day close today above 77.90 would be just what the doctor ordered, just because that was the old March resistance. If we do break down, the worst we're expecting now would be the 7700 area, the recent swing low for this market. The other point to note is that we had that triple bounce at neutral RSI 50 earlier in the month, which so far proved to be a leading indicator on the upside, as it should. Very rarely you get three of them. Normally just one is enough to get a market up. So if we do break through 8,000 and stay there, that will have been the big signal to watch. And finally, the 50 and 200 day lines both rising as well, so that's adding a little bit of bullish glitz to this market. Now, one would presume that if the FTSE is up, then the DAX would be up even more. And in this case, actually, that isn't the case, but at least we're above the old 17,900 target there that we had, that September resistance line. Above that, we're looking for 18,500 by the end of next month, or hopefully even sooner than that, if I can extend the line a bit further. On the downside, if we do break down, then the 17,600 area, the March support would be the favoured port of call. Reverting to the Dow, and here the bounce, the extended bounce off that rising trend channel from October continues, and nice end of day close through recent resistance, 39,300 above that. Looking for 40,200 over the next couple of weeks, maybe 41,000 by the end of next month. Obviously things looking a bit bullish at the moment. Double bounce off RSI 50 for the Dow this month, and I suppose that adds to the bounce off RSI 50 that we had back in February and back in January. So at least showing that particular signal, even though it's relatively obscure, can and does work. Moving on to Bitcoin, where we were sort of slightly stressed out, I think even 24 hours ago, whether this market would be able to find support above the 60,000 level. Looks as though everything's coming to place now. The floor of that rising trend channel from January around the 60,000 level, we basically bounced just near the that low that we had on the 5th of March there. And the view now is that we need to see probably now an end of day close through 69,000. Just above the old record high to give us the prospect of a retest of 73,000, now back on course for 80,000 at the top of that channel from January by the end of next month or even sooner. Moving along to gold, and here you can see that the market had a little probe through the old initial March resistance 2203. We're now back below, but we want to see an end of day close through 2200 to give us 2260 by the end of next month, and that would be a July resistance line projection from last year. The downside at the moment hopefully limited to 2150, which was tested as new support at old December resistance just a few days ago. Might be worth looking at oil as well at the moment, because it has, I think, moved up quite a lot since we last looked at it. Here we got this market going into golden cross between the 50 and 200 day lines. That's probably about a week or two away, maybe 2 weeks away, and then that would suggest that while we're above the 80 level, which was basically initial March resistance, the next level up would be up towards the $90 area, hopefully by the end of next month. But interesting to see that market in a golden cross. The other thing to note is the way we had a bounce of RSI 50 as well on that dip that we had just the other week. Moving on to the stocks, and a stock which may be benefiting from the rise in crude oil at the moment is our exploration. In fact, it's hit the top of our rising trend channel from April 2022, which we were looking for, basically 27 pence. Above that, we've already mapped out the next level up, which is as high as 36 pence by the end of next month. Ideally, we stay on the right side of 25 in the meantime, so above 25, looking for 35 or 36 on Arrow. Next up is Argo Blockchain, where even though the crypto world is booming, the Argo situation not quite so good. What's interesting here is that we've had a little island reversal, some gapping down earlier the week and gapping up here. That may be a sign of a revival for the shares. If we do get that revival and stay above the 10 pence area, which seems to be rather cheap given where Bitcoin is, then the low 20s could be on tap for the end of next month. Obviously, there is the consideration of potential fundraisers in the meantime, but presumably at 13 pence, the share's a bit too low to pull the trigger on that particular scenario. Interesting situation at Chesterfield, where there seems to have been board changes, and the shares pushed up to the 200-day line there at 0.65. End of day close above 0.65. We're looking for a penny, so a lot at stake in terms of the shares being able to sustain the 0.6 to 0.7 area over coming days. So let's see if the stock can do that. Maybe 1 pence by the end of next month. On to Chariot, which I haven't looked at for ages, and here you'll see why, because obviously the shares have been not looking good, but there was a gap higher at the start of the week, and the shares have failed to fill that gap with a hammer candle as well, which is looking exciting. The view now is that the longer we stay above the 50-day line at 8.3 pence, the greater the chance of move to 11 pence by the end of next month. Stock where people seem to have used their crystal balls quite effectively in the recent past has been Capex, and here you can see that we had the big move basically at the end of last week, and the only missing ingredient at the moment is the shares haven't been able to fill the gap up to 0.39. Want to see an end of day close above 0.39 to give the shares the momentum, not only for 0.58 in the 50-day line, but then much higher towards a penny. But maybe that is looking a bit too far. The upside here valid while we hold above really the 0.2 area on an end of day close basis, so a bit of a spiky situation there at the moment. Looking on to the next stock, which is Contango, which I haven't looked at for a long time. Here we've got this falling wedge, the level there, 2.1 pence to break. If we can get through that, then it's 2.6 and basically 2024 resistance. Best case here would be up to 3.5 pence by the end of next month, but I'm not quite sure yet whether the shares are strong enough to deliver the goods, even though you can see that since the low, we haven't had a red candle. So something looks as though it may be going on there. Something nice, hopefully. Moving on to Echo, where there was a trendline break at the beginning of the month, but we haven't really managed to follow through. The main resistance here around the 0.5 level. We need to see a decent clearance of that, decent end of day close above that. Then that would open up the prospect of breaking the 200-day moving average at, let's say, 5.25. And at best case would be up to 0.08 by the end of next month. But very early days yet on Echo, so maybe not a good idea to jump the gun. On to Hummingbird, where I tweeted out late yesterday after the company's RNS that historically the shares have overshot on the downside with negative news. So here it looks as though that is the case. I think the shares around 4 o'clock yesterday, around 5.5 pence, are at 6.7 pence now. But the key here is closing back above the old October support there, 6.85. If we can do that, then it may be that yesterday's move down was just a temporary situation, and we'll get back into the, well, basically 8 pence to 12 pence range, which has dominated the situation for recent months. Onto a stock which I've been meaning to look at but never got the chance is it's IMC, and here we had a bear trap gap reversal, so gapping higher through the 50-day line. Want to see the shares remain above that 50-day moving average around 1.7 pence. If they can do that, there could be a retest of the November resistance at 3.5 pence, but a little bit early there. And as I said, ideally we stay above the 50-day line on that situation. Came up with the idea that maybe Oracle was ready for a rebound a few days ago, and it looks as though the shares are listing once again. We haven't actually had a red candle on that chart since the 23rd of February, which is quite an achievement given the history of the shares. The last 3 days, very strong candles, and obviously on Tuesday opened at the low, closed at the high, so that does suggest that we could head up to the 0.36 level versus 0.31, hopefully over the next week or two, Best case would be up to 0.04 maybe by the end of next month. On to power metal, which has been consolidating near its 200-day moving average over the recent past. The reason for inclusion today is that we've actually gapped higher through the 200-day line. That suggests that something may be going on, something nice obviously. And end of day close above that 200-day line, 0.74. Initial target there, 0.85 over the next week or two. Big changes at TAP Global, which seem to have been well received by the market, gapping through the falling wedge that the shares have had there at 1.4 pence above that initial target there. 1.6, looking for up to 2.4 pence by the end of next month, if everything goes well after today's gap higher. On to Tirupati, where direct buying has done the trick for the shares, and here we bounced well off the lows, sub 5 pence. Still want to see the shares get up to around 7.5, maybe 8 pence at the 200-day line by the end of this month. Finish off with Zephyr, and here a bit of jiggery pokery either side of the 200-day moving average, but it looks like positive jiggery pokery, if that's a thing. Here you can see that we've got the 50-day line rising, we've consolidated above that, and above the 200-day line, we're currently looking for 3 3/4 pence by the end of next month, or even sooner than that. That's it from me today. More updates tomorrow.